Hey everyone and welcome. If you've been even remotely thinking about making some upgrades to your home to save on those energy bills, you have picked the perfect time to tune in. We're about to break down a massive opportunity to save thousands of dollars. But, and this is a big but, the clock is seriously ticking. So, let me just ask you straight up. Are you planning any kind of home upgrade in the near future? Maybe some new windows? A more efficient heating system? Or are you thinking about going big with something like solar panels? If you answered yes to any of that, you are definitely going to want to stick around for this.
Because here is the deal, the absolute bottom line. A huge set of federal tax breaks is about to disappear. The law has set a hard deadline of December 31st, 2025. And when I say a hard deadline, I mean it. After that date, these savings are just gone.
Okay, so here's our game plan. We'll talk about this closing window, we'll look at the two very different paths to savings the government is offering, then we're going to break down each credit, the 25C and the 25D, one by one. After that, we'll get into the nitty-gritty eligibility rules, and we'll wrap it all up with a clear, step-by-step action plan for 2025.
So you need to know that the IRS basically created two totally different kinds of credits. Each one is designed for a very different type of project. Figuring out which path your project falls on is, without a doubt, the first step to getting the most money back.
Let's just look at the main difference right here. The best way to think about it is this. The 25C credit is like your annual tune-up. It's for smaller, more incremental upgrades, and the key thing is that it resets every single year. The 25D, though, that's the long-term investment. It's for the huge projects, and it has this incredibly powerful feature that lets you carry over your savings to future years.
All right, let's dive into that first one. Officially, it's called the Energy Efficient Home Improvement Credit, but everyone just calls it Section 25C. This is going to be the one that most people use for more common, everyday upgrades. So what this does is give you back 30% of what you spend on stuff that improves your home's building envelope. You know, the shell that separates the inside of your house from the outside world. We're talking insulation, sealing up air leaks, getting new doors and windows, and it also covers high-efficiency equipment, like a new furnace or central AC. Now, for all of that stuff combined, the absolute maximum credit you can claim in 1 year is $3,200. But remember what I said about it resetting annually? That means you could potentially get that full amount again next year for totally different projects, as long as you get it all done before that 2025 deadline.
But wait, that $3,200 isn't just one big pot of money. It's actually split into two buckets. There's a dedicated $2,000 annual limit that's just for things like electric heat pumps, heat pump water heaters, and biomass stoves. Then there's a separate $1,200 annual limit for pretty much everything else: insulation, windows, doors, you name it.
And this is where you really see how the details matter. Inside that $1,200 bucket, there are even more specific caps. For example, you can only claim up to $600 for new windows. For doors, it's $500 total and no more than $250 per door. And for a home energy audit, it's capped at just $150. So all these little limits have to fit under that bigger $1,200 umbrella.
And here it is. This is the most critical must-know rule for the 25C credit. It is a use-it-or-lose-it situation. Let's say your credit for the year comes out to $2,000, but you only owe $1,500 in federal taxes. Well, you only get a $1,500 credit. That other $500, it just vanishes. You absolutely cannot carry it forward to the next year.
Okay, so let's switch gears and move on to our second path. This is the Residential Clean Energy Credit, or Section 25D. And this thing is built for those really big-ticket, long-term investments in renewable energy.
The 25D is also a 30% credit, but it covers the real heavy hitters: solar panels, geothermal heat pumps, battery storage systems, even small wind turbines. We're talking about the major league projects here.
And right here, this is the absolute game changer. For most of these big projects, there is no dollar limit on the credit. So if you spend $30,000 on a qualifying solar system, your credit is 30% of that, a full $9,000. It's not capped at a couple grand like the other credit.
So naturally, that leads to a really important question, right? With a huge credit like $9,000, what on earth happens if that's more than the total federal income tax you owe for the entire year? Do you lose it?
And this right here is the superpower of the 25D credit. Unlike the other one, you do not lose the extra. The IRS lets you carry forward any part of the credit you couldn't use and apply it to your tax bills in the following years until it's all used up.
Let me make this crystal clear. Even though the program to start new projects and claim this credit ends in 2025,
A credit you generate from a 2025 project can still be used to lower your taxes in 2026, 2027, and so on. It's a benefit that can last for years after the program itself is over.
Okay, now that we get the two different types of credits, let's wade into the fine print. Who can actually claim these things, and what are the rules you absolutely have to know before you spend a dime? Now listen up, because this is the single most important rule for both credits. They are non-refundable. What that means is they can drop your tax bill down to zero, but they can't give you more money back than you actually owe. So if you have no federal income tax liability to begin with, say you're retired and live on non-taxable income, then unfortunately, you can't take advantage of these credits.
And the rules for your home can get a little tricky too, as you can see here. For those 25C improvements to the shell of your house, like insulation or windows, it has to be your main home and you have to be the owner. But for equipment like heat pumps or anything under the big 25D credit, the rules are way more flexible. It can be any home you use, even a vacation home. And renters can even qualify if they're the ones footing the bill for the upgrade.
Okay, that was a ton of information. But with that deadline speeding towards us, what you really need is a clear plan. So let's walk through the exact steps you need to take to make sure you successfully claim these credits.
Okay, step 1. The project has to be completely installed and running by December 31st, 2025. Just buying the parts doesn't count. Step 2, and this is new for 2025, for the 25C credit, you're going to need something called a Qualified Manufacturer ID, or QMID. You get that from the product maker. Step 3, keep every single piece of paper. I mean every receipt, every labor invoice, all of it. And finally, step 4, you'll claim everything on IRS Form 5695 when you file your taxes.
And hey, don't just take my word for it. The industry itself is sounding the alarm. Big manufacturers like Daikin are telling their customers flat out, this opportunity has a firm end date. The window to act is closing fast.
So when you really boil it all down, this is your last chance for what is essentially a federally subsidized home makeover. Whether you go for that annual tune-up to boost your efficiency, or you make that big long-term investment in clean energy, the choice, and more importantly, the savings, are yours for the taking, but not for much longer.